Cool. So hello, everybody. Welcome. Unfortunately, we can't see your faces, but hello, hello. And again, just welcome. I'm beyond excited about the panel to get today. My name is Kjael. I'm the CRO at Altvia. And the topic for today, again, I'm super jazzed. I'll try to stay calm, but the topic for today is digital transformation, or perhaps put a little more dramatically, the digital collision coming for private equity and venture capital. And if you look at the industry, it's becoming radically more competitive every single day. PitchBook just released some data that in 2020 and in venture alone, there were 269 new firms that entered the market, and there was $69 billion in assets raised. And both of those were all-time highs in their field, or I'm sorry, in those categories. And if you look broadly across the industry, a lot of the playbooks, a lot of the levers, many are as old as 15 years old, as much as 15 years old, right? So financial engineering, things like that have really become table stakes. And if you talk to GPs, and we talk to a ton of GPs, all day, every day, and you ask them, what's kind of the root of their differentiation, I would say as much as 80% will probably give you something that's along the lines of, we're a smart bunch, we're credentialed, we're well connected, we have a really good track record, and it's 80% of anything is not really that differentiated, right? So technology is, I find it to be a very exciting thing because it offers this kind of vast potential, or something that has for the most part been untapped until this point. And so if that's kind of the headline, how do we think about technology in private equity, venture capital, and more broadly in private capital markets? And a lot of the funds that we work with, the more progressive groups, they use the fund lifecycle as really kind of their guiding light, which if you strip away some of the nuance, the mechanics kind of boil down to as simple as target investors, raise capital, originate deals, execute process, deploy capital, monitor the portfolio, make sure that you're creating value, and then report out on that performance to your LPs just in time for the next fundraise, right? So it's kind of this virtuous cycle, and success begets more success. Assets grow, portfolios grow, LP bases grow, things like that. So that's kind of a simple framework that we hear more often in the market. And if in that kind of construct, the next question is, okay, cool, where do we prioritize? Answering questions like who are, and I guess I would say, where do you prioritize? Most groups will index towards whatever their point of differentiation is, which usually boils down to how they raise capital, how they do deals. So thinking about questions like, who are our most engaged LPs, right? Who's most likely to invest? Why? Because we want to reach out to them and raise funds faster. We want to accelerate fundraising cycles. Or, let's really look at the portfolio and understand beyond, here's our sweet spot beyond just revenue, EBITDA, margin expansion, things like that, but understanding objectively with data, like what are the true attributes that make the top performers, the really special portfolio companies, who they are, so that we can use that information when we go out to find new portfolio companies. And then another thing that's very common, right, is this notion of LP experience, right? Like, how do we give our LPs, they're on iPhones, they're on Facebook, they're logging into Charles Schwab and Fidelity. How do we give them that digital first, very modern kind of experience? Because we know that that's what they expect. So those are some of the questions that are out there. And I guess, who is Altvia? Very quickly, we're a tech platform, built for private equity venture capital, and we help firms do all the stuff that I just mentioned. So just setting the table a little bit, just kind of orient the group here. And without further ado, I put together just a few quick slides to take us through the agenda and make sure that everybody's on the same page for what to expect today. The good news is my intro is out of the way, but we will start, of course, with intros from the panel. And again, just last time, I'll thank everyone. Thank everyone truly, sincerely, from the bottom of my heart. I think today's gonna be a really special conversation. And then in particular, thanks to the panelists. We appreciate you. But we'll start with intros, have the panelists give you a better sense of who they are, their work life, their experience, stuff like that. And then we'll step in and kind of frame the conversation around the status quo. Like, what are we seeing today? Where are we at now, right? Where are we going from? And then we'll move in and kind of zoom, more broadly outside of private equity and venture capital, and have conversations more about, like, what's possible in terms of digital transformation or digital norms in industries across the economy. And then it's going to get real good, and we'll talk about the future. What are private equity and venture capital firms potentially going to look like in this next era if technology becomes more commonplace? And then I know panels have a tendency to kind of trend abstract, strategic. So I want to ask each panelist to put together one really, really piece of actionable advice so that no matter what, everybody today, you're going to leave with something that you can implement or begin to implement tomorrow. That sound all right? And I can't see anybody. These the panel formats are a little strange. Is that okay with the panel? Yeah, cool. All right, here we go. And then, oh, sorry, we'll also, of course, have 10 minutes of Q&A at the end. And then, of course, we hope that this is just where the conversation starts. So I'm sure the panelists are totally willing to have conversations. I'm, of course, willing, Jeff as well. But hopefully we're starting something special here. So, Charlie, if you would kick us off, sir, give us a quick sense of who you are.
Yeah, absolutely. And I appreciate all VIA team setting this up. I'm excited about this. And this is, yeah, I'll try to keep it calm too, because I think this is an area where I get pretty jazzed as well and get excited about. But I help lead our business development efforts at Summit Park. We're a Charlotte, North Carolina based lower middle market private equity firm, raising out of our third fund of $250 million. And our two founders are childhood friends, and that's really embedded in our culture. We really seek to be partners of choice for entrepreneurs and founders across the lower middle market. We're a generalist firm. We spend a lot of time in business services, consumer services, and direct to consumer, and all things industrial. And so, you know, from a just general technology perspective, my background, we spend a lot of time trying to leverage as much data from a sourcing perspective to an intermediary coverage perspective, and also from LP and portfolio management. Huge opportunity right now, and excited to kick things off.
Awesome. Thank you, sir. Next up, Stone.
Hi. Yeah, I also want to echo thank you to all of you for putting this on. Excited to talk about it and learn from all the panelists here. I'm the Director of Finance at Jazz Venture Partners. I lead the financial reporting, investor relations, and just general operations at the firm for Jazz. We're an early stage venture firm, a little bit under $1 billion under management across 5 different active entities. Typically, our initial investment will be in seed Series A. We'll support portfolio companies through as late as Series D, depending on their growth cycle. A couple of different opportunity funds to support companies throughout that. Also very excited to be here with everybody and kick this off.
Thank you, sir. Over to you, Bruce.
All right, thanks, Kjael, and yeah, it's also good to meet the panelists here for the first time, and thanks everyone for coming and watching our webinar. My name is Bruce Sinclair. I'm originally a mathematician, started my career as a mathematician. I was a programmer, I've been a VP of marketing, but then I was a tech CEO of a number of software and hardware companies, specifically an AI company and an Internet of Things company. In 2017, I wrote the best-selling digital transformation book called IoT Inc. It was published by McGraw-Hill, and I've certified thousands of students on digital transformation by my LinkedIn courses, and also I have a certification course of my own. Since 2015, I've been advising companies, starting on the corporate side, but advising companies on how to digitally transform to create enterprise value. So first as an independent consultant, and then I was an operating partner for a private equity firm, middle market private equity firm with $1.5 billion under management. Recently, I wrote the book, The Private Equity Digital Operating Partner, using digital transformation for value creation. So I think it's really on the mark for today's webinar. And currently I'm the founder and principal consultant of Digital Operating Partners. So we provide fractional value creation in the digital transformation for private equity firms. Usually we're looking at companies with around $30 million in EBITDA, but it can be a little bit less than that as well.
Awesome. I think it's safe to say you might know a thing or two about digital transformation.
Yeah.
Awesome. Good stuff. Tim, over to you, sir.
Well, thanks, Carl. And I appreciate the opportunity to speak today and share what we're seeing in the market. So I'm the founder of a firm called PStack. We maintain a database of all the software and market data providers that service private equity and venture capital firms. So we're tracking over 200 providers of software across front, middle, and back office, and then also market data providers and kind of next generation data providers. And we use that resource as the starting point for our procurement outsourced procurement service. And so on a day-to-day basis, we're working with GPs of varying size and different stages within their technology transformation and digital transformation to help them identify, assess, and then procure the right software and data services that are aligned with their requirements. So we are looking at a wide variety of different products across the spectrum and helping firms to understand what their options are and who are the vendors that provide these various different data and technology and software services, and look to run them through a process of being able to kind of compare these different services on a like-for-like basis and pick the right platforms in an efficient, confident manner.
Nice. And you left out that across all technology vendors in the entire galaxy, Altvia is #1 in your heart. That means the absolute world to us.
It certainly is, and you specifically can't.
We'll take it. All right, and last but not least, Jeff Williams, who around these parts we refer to as Dubs. But over to you, my friend.
Yeah, hi everybody. Jeff Williams, and lead industry solutions and strategy, and I guess that means talking to the market and understanding what problems are out there, and near and dear to me because I started my career in 2006 at a venture fund of funds, Greenspring Associates, and so had the pleasure and the pain of kind of being on both sides of this equation, and mostly felt as though there was a big opportunity to build technology that started to kind of look more like the future and more like B2C financial services and what have you. So been with Altvia for 10 years now, and that's what we've been working on. So excited to talk more about it.
Awesome. And a shameless plug, this will be the only one from me, is our friend Dubs has a podcast, Preferred Return, that is absolutely exceptional. So if you're a podcast fan, I would highly encourage you to tune in. But one last super quick look at the agenda, and then I'll kill the screen so we can see everybody. On to the status quo. So, all right, the status quo in private equity. I know I kind of alluded at it a little bit, but when it comes to what you see amongst your peer group, what you see, Tim, perhaps in terms of some of the engagements that you're working on, Dubs, the conversations that you're having in the market, high level, what are kind of the common workflows, at least that are being addressed with technology, or more broadly, perhaps just in general, how are groups utilizing data? Let's perhaps start there. And Stone, I know that you, when it comes to kind of internal operations, you kind of think about that question in like 3 buckets. Can we maybe start there and kind of give the audience a framework to think about?
Yeah, absolutely. I think you kind of alluded to the fund cycle in the beginning, and I think that's kind of where we and I see kind of venture firms particularly dividing up their workflows and kind of the data sets and the first is the fundraising, then there's the capital deployment, there's the portfolio monitoring, the financial reporting, and then finally the LP communications. And so I think that what we've seen is that people end up siloing not only the team members that work on each of those functions at times, but also the platforms and data that's used across each of those. And it's very much disaggregated, and the systems don't speak to one another. So as LPs go from the fundraising stage to a closed LP to needing some of the ongoing reporting, a lot of times the systems need to manually transport that data from one to the next, and it becomes very burdensome on internal teams, especially kind of the back office and middle office that's primarily corresponding with the limited partners. That sometimes you can drop contacts, or it gets crossed on what actually needs to be communicated, and then the teams don't know what has already been passed over. And so I think that the status quo is very manual, and it's something that a lot of teams have thrown bodies at, I think, in terms of internal firms, and just saying, okay, we need someone dedicated to fundraising, or someone's dedicated to just communicating financial reporting information to limited partners. And so I guess without getting too far into what some solutions are, that's kind of where I see data being very disaggregated and not speaking to one another, and it becoming very manual for the back office to make sure things run as efficiently as possible.
Cool. So just maybe if there is some technology in place, it's somewhat fragmented, means data has to be moved around, can kind of yield a choppy experience for everybody involved. Okay, got it. And Charlie, I know you think a lot about, where like getting leverage from data. And if you were to speak, it seems like kind of the status quo, everyone's kind of in like a learning, testing phase, like maybe sticking their toe in the pool. Could you elaborate a little bit on that?
Yeah, absolutely, and completely agree with Stone's sentiment. I think, when really I spend most of my time and having two responsibilities: one, deploying capital, and two, adding value. And right now, I mean, there's a huge opportunity on the technology side, on the deploying capital and adding value. But I think, as investors, we're quick to push 100-day plans. We're quick to push 3-year, 5-year strategic long-term visions. But we're don't take the time to take a step back and look inward. How are internal processes? How are we pushing the same methodology across our portfolio into the assets we invest in? How do we apply that inward? And I think, recent example, we had a great DTC business. We pushed some customer segmentation and cluster profiling exercises, and we looked at how can we apply that from a sourcing mechanism, and look at the companies that we have interest in. And so I think the question is to look at internal operations. And yes, the conversations that we're having in the PE firms in our network, it's really testing technology. I think everyone's excited about it. We're in the crawling phase right now, and it's a great opportunity.
Cool. So perhaps a little bit of practice what you preach.
Exactly.
Right on. And Tim, I know that you think if you're looking at the market, like some would say that there's a spectrum for technology adoption. Perhaps there's, kind of a polarized kind of ends to that and perhaps some gray in the middle, but that you're finding that there are really kind of two distinct cohorts or sentiments really that are kind of rapidly evolving. Can you give us a sense of how you define those cohorts and like perhaps the speed at which you're seeing change?
Sure. And I feel the private equity has this reputation around that they're slow for adoption and they're kind of behind the curve when it comes to technology. And I feel like to an extent that's becoming a little bit of a cliche. And, we do panels like this, right, with a firm like Altvia, where you guys have hundreds of clients that are using your platform. And as you say about your platform, this is giving your clients, all of these advantages as far as the things that Altvia can offer, right? And it can solve some of these problems. And firms that use Altvia are now, towards the forefront when it comes to leveraging technology and data, and you're making it easier for that. And yet at the same time, we also hear, okay, private equity firms are behind and they're old school and they're dinosaurs. I don't think that is as true as it was if we'd asked this question 3 or 4 years ago. And so we work on like a pretty wide range of projects. And we do have firms that are very Excel based, and they come to us and they say, look, we need to digitize our, say, middle office portfolio monitoring process. We want to look at the various different options there and what they could provide. And we're basically trying to digitize an existing process and leverage technology to do that. And there are some that are at that kind of stage of the process. But then, we're also dealing with firms. We're working with a firm right now where they are ingesting data from portfolio companies directly into a Google Cloud. They have a data warehouse internally. They're using Looker for business intelligence, and we're helping them to look for next generation data sources to enhance what they're already doing, which is pretty forward looking. And we find that one of the really interesting things going on right now has been that first time fund managers in particular, we are seeing their ambitions and what they're looking to build from the outset to be more, forward-looking as far as leveraging technology and data. And I feel like the point at which, as far as, say, AUM goes, the point at which firms are looking to adopt and understand the latest options as far as data and technology is lower. Like smaller firms are looking at this than used to be the case, and earlier in their life cycle as a fund. And I feel like it is giving people kind of a false sense of security to say that private equity is backwards and we're still early in adoption. We are in certain cases, but not to the extent that it has been before. And so there are definitely distinct cohorts as far as who's adopting and who's not. But the trend is certainly moving and shifting more towards firms that are now looking at technology really, really seriously.
For sure. And we see that a lot too, where in particular, somebody from a more tech-oriented field is teaming up with a first-time fund manager, and it's like day one, they're like, what are we doing? They're like, we're standing up a data warehouse. Let's get the data pipeline. Like we need to get an analytics layer so we get visibility into the metrics that we care about, and that's just the status quo from the category that they're coming from, right? So the actual landscape in terms of the human capital is changing a lot as well.
Exactly. And if you're a first-time fund, you want to do this stuff, right? And you don't want to wait until you've made 10 investments and you've raised your first fund and then, right, well, let's try and get all of this data and figure it out and get it loaded in. You want to be doing this stuff from the outset. And that's the mentality that we're starting to see more of.
Totally. And Bruce, I know that you had mentioned, right, when most people in private equity hear tech, they think IT, right? And financial engineering, kind of table stakes, as I had alluded to. So where do you think, like, kind of the headspace is today, and how do you kind of think about technology, perhaps to complement some of the comments that we've already heard?
Well, the first thing is I'm going to be providing the audience a different perspective. So far, our panelists have been speaking about more internal, using technology, so data and technology internally within their fund to improve their operations. Where I will give the perspective is outwardly. So I work with the portfolio companies and I add value to the portfolio companies. So in my particular case, what my experience is digital transformation. And digital transformation has so many different meanings. You kind of alluded to it, Kjael, is when you talk to private equity GPs, generally when they hear digital transformation or technology, they're thinking IT. But in reality, if you think about it from a value creation perspective, IT isn't where the value is. So one good way for everyone watching right now to think about technology, at least how it applies to portfolio value creation, is to think of it in 3 different layers. The first layer is kind of like what we've been talking about here so far, is more the operational layer, but for the portfolio company. So this would be things like IT. This would be like business systems. So, one of our companies, we had to do a lift and shift of their ERP system because it was a carve out, and so that's IT work. And then and that's going to be IT work in business systems. The middle layer, which a lot of people know about, they've heard about it. That would be things like e-commerce and digital marketing, automation, robotics, and then RPA, if anyone's heard of robotic process automation. This again is more the automation layer, but really where the value, if you start measuring the value when it comes down to enterprise value, both upping EBITDA and also upping the valuation multiple. In my experience, it's more using high technologies. And so this is the smart layer. And so this is things like Internet of Things. This is artificial intelligence. This is blockchain. This is augmented reality. This is all the buzzwords that you see in the press. But these technologies, the one thing we want to do is make sure we de-risk them. The last thing we want when we're deciding where to deploy the capital and where to deploy our portfolio company's capital in reality is going to be make sure that the return on that technology investment is highest. And so we can measure a digital transformation at a very high level is really just a sequence. Again, I'm talking from a portfolio perspective. It's really just a sequence of digital initiatives. Each one of these digital initiatives will contribute to enterprise value. And so it's very important to look at this from a financial perspective. But at the end of the day, digital transformation is just another swim lane. It's just another tool. And it's very much separate from the other value creation levers that GPs are using today. So the status quo from my perspective, now that I've explained it, is kind of like what you said earlier. The status quo is, oh gosh, first thing we need to do is we need to make sure that the IT systems are all working. And so, we got to do that before we get to the bells and whistles. But the reality is, if you're going to be selling your company to a sponsor, then maybe you want to do a little bit of work there, or maybe you want to leave that for them. If you're going to be selling it to a strategic, in all likelihood, that lower level of operational technology is going to be thrown away and it's going to be incorporated into a bigger picture. So I think it's really important to just consider that there's another value lever that's out there, and that the risk is kind of gone on. It's out of venture right now, and then the risk is kind of minimized. And so I think it's just for everyone. Maybe the one big message is just to consider digital transformation on the portfolio side as another value lever to add to whatever value creation techniques. In this case, I'm speaking to GPs, but in whatever value creation techniques that they use.
Awesome. And last but not least, and Dubs, if you could, I know that you perhaps even maniacally consider things from the LP perspective. Mm-hmm. So if you could maybe give us that view to kind of round out a more holistic conversation.
Yeah, I was going to say, I'm glad that Bruce talked about it from the perspective of the portfolio company. I think, Stone may have said this. the tendency today is for many GPs to throw bodies at things, and it's oftentimes a very reactive posture, right? So there might be, sort of initiatives for certain systems and what have you, but still, I think that the general kind of posture is a little bit reactive. I think it's missing an opportunity because from the LP perspective, really thinking about like what could we enable effectively in customer service, right? I mean, that's sort of an odd term. It's sometimes a little uncomfortable to use here, but I think that the status quo today is missing that opportunity, right? It's sort of like, let's wait for the LP to ask for that, and then we'll sort of throw an analyst to trying to track that down. And I think that, we'll get into it here, but the collision, if you will, that's implied to be on its way is going to be, what Tim mentioned, which is emerging managers that are being much more strategic and thinking about what the future of the experience for the LP could be like. And, it's not rocket science. It's just simply more proactive, more akin perhaps to like the, B2C financial services stuff that we see. So I think it's missing an opportunity for LPs today, status quo.
Got it. And also, I know some questions are starting to trickle in. So raise the questions in the chat as they come up when they're fresh and inspired, and then at the tail end we'll go through them and make sure that they're answered. Any that aren't, we'll circle up with an email to pointedly respond to those questions. Cool. So and I think we're running just a little bit behind. So I wanted to, I guess, just to shift gears, and Bruce, I think you painted an amazing picture there in terms of like the role that modern technology plays, in other industries today. And I guess is on that topic, Dubs, do you want to perhaps speak a little bit about how we're seeing, again, like consumers, we consume, all of us, GPs, LPs, investors, portfolio companies, right? We engage with technology all day. And as a byproduct of that, we kind of get conditioned, right, to have certain kind of expectations. So what type of impact do you see consumer technology having on LPs, on GPs, and expectations that way?
Yeah, well, I think that, if we go back 10 years ago, even 7, 8 years ago, it was logical to see, the sort of the institutional LPs starting to come more and more to private equity that were also, invested in other asset classes. It was natural to think that the sort of same expectations, or at least comparable or within the same, kind of theme of what to expect in terms of reporting and availability of information would be the demand from LPs. In terms of the consumers, I mean, it's been happening now for quite some time. I had this moment maybe a year or so ago where my phone showed me an article about Schwab introducing and integrating with Google Assistant so that you could hey Google, what's my account balance, right? And I'm sort of reading this article thinking like, why would anybody ever want to do that? And the article itself actually sort of implied like it's probably less about the fact that somebody wants to do it, and it's more about the sort of war that is being waged to gather assets in consumer financial services. And so I think that the expectations for consumers, and so too with institutions, now today is in many cases being sort of led by B2C financial services. Where are the assets? What's my exposure to this, that? It's on demand, what have you. And so I think that, even if we're not there, or we never get to the same, exact spot, obviously the type of information is very different. I think there's no question that the sort of expectation is actually becoming that we ought to be able to have this information, especially when we're committing, hundreds of millions of dollars to a manager. It ought to be something that we can get proactively and not just have to wait for. So,
and furthermore, right, it's not their money. I think that's the key difference. It's not their money. They are responsible for other people's money, right, Jeff? And so you think like, it's not a matter of personal preference like it might be when we're talking about B2C, but you're going to get to a point where the LPs are demanding this stuff and it's not their decision. They are, it's their fiduciary responsibility to be tracking these things in this way, right? And so if you're not able to provide it, that's going to be a blocker to even raising capital full stop. I think we're going to start to see that in the next few years.
Yeah, totally agree.
Absolutely. I think there is that expectation, like you guys are saying, just as we're all consumers, we are all being bombarded by advertising. We're being bombarded by the media because they're trying to get clicks. And so we're being comfortable. And like Tim's saying, there is an expectation that, heck, we should just be able to double click in one place and we should be able to get the information we need. On the other side, I think, like I was saying earlier, people are starting to hear the terms artificial intelligence. They're starting to hear the terms Internet of Things and augmented reality, maybe not. But there's also this smart mega trend that's washing over us as consumers. You can see it with smart speakers. You can see it with smart homes. You can see it with smart cars. These are just autonomous vehicles. And I think there's a thinking within GPs and LPs as well that, wow, this is cool, but there hasn't been that bridge over to how do we deploy this within our portfolio of companies. So most GPs are chasing tech deals if you look at the numbers and you look at just from a percentage point of view. But really the biggest opportunity, at least in my view, is taking a traditional company, which is going to comprise of probably 80% of most portfolios, and then transforming them into digital companies, as opposed to just thinking, oh, I got to get into digital. Because the reality is, if we look at a few years in the future, there's not going to be a technology sector. There's not going to be a software sector, because technology and software is going to be inside all, it's going to just be part of all sectors. So I think this notion that you were bringing up earlier, Kjael, of, what's the effect as us being consumers? I think we're getting comfortable with these terms, and we're starting to see them, we're starting to own them, we're starting to use them, but there hasn't been that bridge yet of going, well, wait a second, we can actually make our companies smart. And what really smart means is data driven, and using that data to create value within for their customers.
And I can't believe you just said that, Bruce, because I'm trying to scramble here to pull this up, but there's a gentleman, Jay Krebs, who's the CEO of Confluent. And he has this quote, and I'm going to butcher it. I was going to try and pull it up real quick, but it's basically, it's not that there are tech companies or there are software companies. It's that we are all tech or software companies, and that increasingly our processes are defined, they're measured, they're executed, our customer interactions, right? Like software has permeated into a place where businesses are defined in the technology, right? So as you said, it's less, and that's, I never thought, like, they're literally, the tech sector is just kind of permeating into everything. But okay, excellent. And I'm gonna do my best to keep us on agendas, which I'm not well known for. Okay, so we are going to change gears, and now it should start to get really, really interesting. So hopefully we're all feeling like we've got the table set here, and we can start to think about, envisioning the future. So what's a private equity firm look like in 2025? And we'll just start there, because I think even 4 years from now, right, like that there could be some pretty radical change here. And Stone, I loved your comment, and the black box days will end. So what do you mean by that?
Yeah, and I think my perspective, again, you can answer this question in many different ways, but I'll kind of focus on like the venture firm or PE firm interaction with limited partners. And I think particularly in venture, once a LP commits capital, they fund their capital contributions, and then sometimes they might just see the cash come back and not exactly know what happens between cash in and cash out, as it becomes this kind of black box, and they don't have understanding of what's happening in their portfolio, what's happening with their money, how it's being deployed, what are the ESG metrics that they're investing in, and creating a sense of loyalty to the firm, right? And so I think that those days are going to be going away. They're quickly going away. And diligence for all of our new funds, it's been a top of the form question on what is your reporting and what can we expect. And so I think that in the future, and maybe not even 5 years, probably 6 months to a year even, it's having the ability to make the interactions with limited partners seamless. And I think that's from fundraising and closing their contribution and commitment to the funds, to actively informing them about their investment in the portfolio. And I think Jeff was saying that it's not necessarily just what limited partners are asking for in terms of the ILPA forms or whatever information they might want on the metrics for their personal investment and value. I think the firm's pretty good at providing cap statements. I think it's more about providing insights into the actual portfolio companies and those metrics. What is the revenue generated in creation since our investment into now, to show how our firm is creating value for these portfolio companies? What are the clinical milestones that we've hit and how have we helped them get there? What's the geographic location? What's the diversity metrics of the CEOs and leadership teams? These things are all becoming more and more important to limited partners. And instead of being reactionary and just providing that information in a diligence call, it's having that information actively available for them through a secure portal. And so I think that for the GPLP interactions, it's going to drastically change in the ongoing amount of data and flow between the GP and LP in the near future, and having the ability to do that hinges on a lot of things, and you could talk a while about it, but I think that's kind of where we're moving towards. So I'll stop there in the interest of time, but I think that's for me and where I see our firm and many firms changing into.
Love it. And Charlie, I loved your comment too, where like it's going to be harder and harder to do something that's truly exceptional in the market if it's not rooted in tech or tech or data. I'm sorry. Could you elaborate a little bit on that?
Yeah, absolutely. And just to take a step back, I was listening to Jeff and Tim and Bruce speak. I think, one thing that we've done in just to accelerate data and the use of technology across our portfolio, we had actually invested in a data analytics consultancy back in 2019. And during 2020, right, professional service firm, it was a tough year for a number of on-site professional services firms. And so we deployed their resources across our portfolio. And so we had, anywhere from the data architecture to the data profiling, modeling to the actual output to, some sleepy manufacturing firm that's got a great margin profile, but not using technology. We essentially made these tech-enabled businesses that at the onset of the pandemic were not so. And so we thought about the trend coming down the market and how we could leverage our current resources. And granted, it was throwing bodies essentially, but it got us up to speed, and we got the chance to take an opportunity of a bit of a downturn and ramp up the technology side across our portfolio. But just in terms of lower middle market, where I spend bulk of my time, it's becoming extremely more competitive. Next 5 years and 10 years, it's going to be more so. And I think about the use of data and technology from a sourcing perspective, from an LP perspective, and also from portfolio management, it's going to be a necessity. And so the quicker that we can get ahead of the curve, implement as much new technology as possible while being strategic, and a lot of that is testing for us, we're going to have a leg up in the competition. And I think about, outside data, right? There's a number of third-party data sources. There's a number of public data. We really look at how we can aggregate the data, how we can learn from the data, and then be relevant to entrepreneurs and founders. So we want to be the first capital partner that they call. And the only way that we're going to be doing that is by being on the same page with them. And the data, leveraging data, aggregating data allows us to do that. And so I think we're going to continue to push there, really compile as much information as we can. And if it's leverage, right, a third-party resource to help make something of the data, then we're going to do that just to get a leg up.
Got it. And something that we hear too, right? And it's there's another great quote where it's like speed is more important than capital, right? So, how do we actually act on this information to make sure that not only we see the right deals, but that we get to the right deals first? I know that you mentioned you want to be the first financial partner in an entrepreneur's mind when the time comes, right? And the best way to do that is not to just cast a very wide net, but to cast, a laser kind of sharp specific net. Awesome. And then I know you have some thoughts on it. I don't want to totally pull you down the rabbit hole, but when it comes to like shared resource models as well, what role do you think that has in a firm in 2025? Because I think that's another topic. And I think to enable shared resource model, right, you have to have a really good handle on the portfolio in terms of operational performance, the gaps, be it talent, be it, customer acquisition, et cetera, et cetera. That's a fun conversation. You and I could jam on for hours, but like, how are you thinking about shared resources, and where do you think that stuff's going to be in 3-4 years?
Yeah, I think we're early there. I think we've looked at, how do we view our portfolio just from a holistic perspective, right? And we're generalist firms. So we're in a number of industries, number of sectors that, how does a direct-to-consumer tree and shrub business interact with the remanufacturer of fuel pumps, right? But I think about, we can look at the amount of information coming to both businesses and how can we be the best financial partner and sponsor to these companies by having some degree of shared resources. So we've looked at, we've got an outsourced CFO, of course, but I think on the data side and information side, rather than, again, throwing bodies at it, we're looking at technology platforms, third-party resources that we can pull together to aggregate the information and have a holistic view across our portfolio. And so I think, we're early there, but it's going to be a massive opportunity to see how we can combine businesses that seemingly have no obvious interactions, just from a margin perspective, identifying gaps, executing those, and learning from each other across a broader portfolio.
Cool. And there's a very interesting article in HBR. I can't remember it's like private equity achieves a new level of maturity, something like that. But for any of the HBR followers, there's a good topic on that elaborates a little bit on Charlie's comments there. So Tim, and of course, if anybody wants to jump in and share your mind in any way, let it rip. But Tim,
yeah, I was just going to say, Kjael, if you're looking at the future, I think everyone agrees that the digital tide is going to rise all boats. It's going to rise the technology within the GPs. It's going to rise the technology within the portfolio companies. So there's a confluence, I think, of just more digital being part of our lives. And the second one is, if you look at the next trend, is there's so many new private equity firms, venture firms that are entering the market now, raising funds. And the returns have been going steadily down. And you mentioned earlier that the financial engineering, the arbitrage, the proprietary deals, all this is becoming more, everything's an auction, and everything is becoming more normalized. And so I think there's going to be the need and there's going to be a demand. We're talking about what we want to give to LPs, and they do want to know the information, but ultimately what's more important about how the money is being used is the return that they're getting on that money. And so there's going to be more, I believe, more demand on value creation within the portfolio companies to be able to get the returns as there's more entries into the market, as there's more commonalities between the firms. And private equity, has some very unique advantages over, let's say, a corporate or a strategic for making these type of changes. And specifically, it's because there's that desire for change. There's quick decision making. You can align the resources very quickly in terms of what needs to be done. And so, to me, I just see, and again, it's perhaps it's self prophesizing and self gratifying, but I see the confluence of technology and the need for more returns. Ultimately, private equity is just going to adopt these higher technologies and use them within their portfolio companies.
For sure. Yeah, and that's an interesting thing for me because I am in some capacity an operating partner, right? Like I was installed as part of a private equity partnership with Altvia to be CROs, and that's that type of transformative change is just remarkable, and it's the speed, right, is really exceptional. So that's all very exciting, and potentially with a digital undertone, right? Like that's a lever that many aren't pulling too hard or have never pulled before, and whether that's internally, externally, across the board. So I think that's a very interesting perspective. And Tim, LPs, what are they saying? Are LPs asking GPs where, are they putting them on a grid? Here's digital transformation. Where would you put your fund? We're thinking about investing. We only invest in top quartile digital firms. Are we there yet?
Well, I do feel like having a defined strategy around data and being able to prove that you are, doing what you should be doing is going to be an important question that's going to just be a standard for operational due diligence moving forward. And if you can't provide the kind of reporting that Stone is talking about, then you're just not going to get an investment. It's not going to be a case of saying, well, we've always done it this way. And yeah, if you're a public pension plan and you'll have, rules around what you deem to be the minimum requirements, these are going to be around things like having a defined data strategy and looking at these things. But I think from the GP perspective, you've got to think about what is the potential, right? So what could I be doing? If you think about data, what could I be doing to leverage my ownership of these assets? And there are a couple of things that you think about. So you think we've got access to this data, like in a perfect world, if I'm sector specific especially, I could be leveraging all kinds of data on, if it was, say, a SaaS focused play, then you're looking at ARR and churn rates and all these different things. And but is the GP putting all of that stuff? Like if you think, look, in a perfect world, I'd be taking all of this data, I'd be using that to enhance my management of these companies, right? I'd be using it to enhance my due diligence process. And I think that the other thing I would highlight is that we often talk about LPs and GPs, but then you've also got portfolio companies. And I feel like in 2025, you're going to have private equity firms that don't see themselves as private equity firms, but see themselves as, more holding, that they are more like a strategic, they are more like a corporation, and that they're looking at how can we leverage the portfolio that we have to provide insights back to that portfolio and leverage connections that exist within the portfolio. We're already seeing this at certain firms, but there's definitely a desire for the GP to be providing more value back to the portfolio companies, which in turn will enhance value. But certain things like, look, let's help our portfolio companies understand their relative position to the market in this sector, because we're sucking in all of this data, enhancing it with market data. We've got all this great stuff going on. How can we intelligently provide this information to LPs, sure, but then also to the portfolio companies themselves for strategic advances? So I feel like that is the way really to think about things, and what we expect to see moving to 2025. And I think the comparison to make is, if you think about, why do private equity firms have a key man clause, right? You think, I'm investing in this private equity firm, I'm investing in the people. If this guy leaves, then we could be screwed, because that's where all the knowledge is sitting. And I think you're going to evolve that people have a similar perspective on that when it comes to the data and how they've digitized, operating procedures, value creation plans, all of these things, to the point where that's just as important. Like, that becomes part of the firm, and you need these strategies in place. And, in a similar way that how the key man clause was considered in the past, you're almost going to have a key clause around what that data strategy is.
Yeah, totally. And arguably, right, private company data is among the most opaque and proprietary data around, right? So not only can you leverage that to help your portfolio companies understand respectively how they're performing amongst the portfolio, but you can round out your perspective of the market, right? So it's a very powerful thing, and a lot of times that stuff's there, and there's just not really a knowledge or an acumen around how to get leverage there.
And it's not just more data; it's more intelligent use of that data.
Right.
It's not just about collecting a ton of stuff and then you don't know what to do with it. You have to have a strategy around how you actually make that actionable and leverage that data intelligently, not just collect more of it.
Totally. The tendency is like, data, okay, let's get more. And it's like, okay, not sure what we do now. Cool. And Dubs, I know you think a lot about like the effectiveness between GPLP and I feel now that we've somewhat neglected the portfolio, critical piece of that kind of trifecta, but like that they're going to be much more effective interactions, because a lot of the surface level stuff is going to be the first thing that technology can strip away, like asymmetry around information, things like that. So how are you thinking about what those interactions will look like in the future, and what's some of the fuzz that the technology could wipe away, or that could, I guess, preserving the humanness of those interactions, if you will?
Yeah. Well, so I had an interesting experience this past weekend. My neighbor came home with a new car, and I was talking to him for a minute. He told me how he had such a hard time finding this car. He'd been calling around all these dealerships. And my immediate thought was, I don't think you have to do that. I think like you could sort of go somewhere on the internet and put the kind of car you're looking for, and then, somebody who wants to sell it to you will actually, give you a call when they have it. And, if you translate that, I don't think that, there's ever a situation where, GPs, LPs get away entirely from building a relationship. But like, the LP, with the availability of data and information, all the way through the ecosystem, right down to the portfolio company and the operational performance. How did we create value here? Where is it in the data? I think that the ability for that data to become available probably makes it more efficient for the sort of dating to proceed between GPs and LPs, right? Because the story's there. And then to your point, to the question, I think that what that's going to allow is not this sort of automated, okay, well, we're not going to get to know each other and go on dates. It's more of a, now we can sort of know more about what we're going to talk about on the date, right? Like the time that we spend can now be much more effective. And we're not sort of spending valuable face-to-face time looking at slides that are, pretty opaque on where the underlying data is. Like, you're telling me the story you want to tell me. I want to go find my own story in this data. And I think it will have at least some effect of sort of improving the way the GPs and LPs find each other and build the trust behind the relationship.
Cool. And I kind of lost track of time. Sorry, figured I would kind of get lost in this one. But so if it's okay, I'm going to kind of just distill down when it comes to actionable steps from the panelists here, and just kind of get through that real quick, so we have at least 9 minutes here for questions. But so most of the advice was that you want to really make sure like it's worth the investment of your energy and your time to stay current on the technology that's available. Because it's likely the case that you'll need something 6 months before you do. That was from our man Stone. Charlie, I know you mentioned that it's more about aggregating, private company information, or just have some kind of data strategy so that you can connect your dots. And then, and Bruce, I should say you and Stone were aligned in terms of just like get familiar, understand the landscape, right? That's a very productive step. And then Tim and Dubs, you both were pretty aligned, where it's like there has to be an explicit kind of cultural direction that's established. That is, we are moving in this direction. We will be more tech, more data driven, and then establishing a point of accountability, establishing a champion internally to move the ball forward. So I think that those are all extraordinarily useful, and hopefully that's helpful for the audience. But with that, let's pause and let's see if we have some questions coming in here.
So we do have a question, which is, how do you de-risk these emerging technologies? So I don't know, maybe Tim, maybe that's perhaps one that you can chime in on, and feel free, the attendee that asked that question, to elaborate a little bit if you are so inclined. But
go with a proven vendor.
I mean, I feel like, honestly, the best way of de-risking it is actually to try and think beyond the vendors and beyond the specific applications. And I think it's way more common these days that firms are thinking around a wider data strategy and data architecture that underpins what they are doing. So you're looking at these solutions, right? And you're looking at different data providers and sources and ways of doing things, but you do it in such a way to de-risk it so that if you were in 2 years to say, you know what, there's a better technology for me on the application level, that I'm able to switch it out and get new stuff in there, that you're not closing off the avenues of opportunity moving forward. And so you have to have thinking about defined strategies. So, you know what, I want to change this data provider, I want to add a new one in. Will the applications that I'm using and the underlying architecture around that support an ongoing strategy around adopting data and technology? And I'm always wary. It's a challenge, right? Because all of the market data providers and to an extent software providers are all incentivized to make it difficult to leave and make their products very sticky. And there are different ways of doing that. There's ways of doing that by having a really great, valuable product and great customer service. And then there are artificial means where your data's locked up, you can't access it, moving away is difficult. And I always kind of feel like it's worth thinking about, you know, the future and how that aligns with the strategy where I can add new sources in, I can switch out applications, I own the data, I've organized it in the right way, and I've thought of the right kind of strategy around that. I think that's the way to look at it as far as de-risking. And then I also feel it comes down to having a good plan for assessing the value of these technologies, right? So what efficiencies am I gaining? What time am I saving? I can put dollar value on that. I'm freeing up my analysts from doing horrible menial tasks that a smart 16-year-old could do in Excel, and freeing them up to do more, you know, value-added tasks. And then what does this opportunity, you know, what opportunities am I gaining that I didn't have before, and what's the value behind that? You need to have a framework of assessing the technology and the value that it's bringing, and not just kind of, you know, stick your finger in the air and think, hey, is this good or not? You should be able to really answer that question with more robust metrics and science behind it.
Awesome. And Bruce, if you could add to that, and I would also kind of blend that with a conversation around, so kind of the first thing would be, how do you kind of de-risk these very frontier, you know, digital transformation strategies, right? Because and I think commonplace AI, you know, augmented reality, everyone's like, okay, great, have no idea what that means, right? And LB's included, right? So how do you not only de-risk, but how do you kind of bring down and normalize the nomenclature so that it's concise and punchy, and it's something that you can articulate to LPs? And then we have one more question, which will be around how to think about budgeting for these type of technologies, these data sources, and when do you put that stuff in house? So, but back to you, Bruce. De-risking and speaking in plain speak about it, so LPs are like, got it, cool. Value creation sounds great.
Yeah. So de-risk. So first, we'll talk about speaking to the LPs. We're going to speak to the LPs on the financial statements. They don't care about the technology so much. They might peripherally want to see the words. They might peripherally want to see the direction, get some trends. But everything has to come down to enterprise value, and everything's going to then break that enterprise value into how do we grow revenue, how do we improve margins, and how do we increase the enterprise or the multiplication value multiple. From de-risking, there's 3 different areas in using high technology. The first one, which we really haven't talked about, because I guess it's maybe it's not as obvious, or maybe it's not as important internally, because we kind of get the idea. But the first area of de-risking for high technology is to produce the right digital investment thesis. So you need to have the right strategy. I think that's maybe that's pretty I guess obvious, but the first thing is to get the right digital investment strategy. The second thing is we're not inventing technology. Technology is a tool. All we care about are the numbers. The tool is artificial intelligence. Sure. The tool is IoT. The tool is going to be augmented reality, whatever the case is. But we have to have use cases where we can demonstrate on the financial statements, basically, how do we grow the company? How do we grow the company? And then how do we have a really good exit narrative when we sell the company? And then the third area of de-risking is going to be the execution. And there's often a knee-jerk reaction to go to the consultants, but in the reality, the consultants for these type of technologies that I'm talking about at the smart layer, not the automation layer, not at the operational layer, because I think consultants can do that. But here you need to find subject matter experts, you need to find vendors, you need to find service providers that are the best in their field. And so, combining those 3 things, that's how you de-risk it. The last thing we want to do is invent something new. So really what we're doing is we're just stitching stuff together. And if we're doing venture, that's another topic, but I'm talking specifically from a private equity perspective.
And Bruce, do you think that boils down to having the right people as well, right? Because I see more firms that have data scientists on staff from the outset, then looking to bring the right people in to manage some of these initiatives, and they understand, they speak this language, and they have that knowledge. Do you think it's necessary to have the right kind of people that understand these things, or are you okay just kind of using external consultants to put systems in place and do it that way?
Yeah. So ultimately, there's different models for operational improvement within the GPs. You can have an internal team, which is what I was part of. I was the digital operating partner, and so you have an internal team. But really, you don't want to bring in a data scientist unless you have the skill set internally to come up with the investment thesis. Because we've been talking about data, but there's a step before data, and that's value creation. So what's the value that we want to create? What's the information we need to create that value? What's the data we need to collect to create that information, to create that value? And then what's the tech we need to deploy to create that data, to create that information, to create that value? So I think you're jumping in kind of, my advice would be, don't necessarily start with the data scientist, although I think they could help in a lot of ways. But generally, when you're looking at a data scientist, you're going to need 3 kind of components. One is going to be a subject matter expert in the field that the portfolio company's in. It's going to be hard to find someone that's going to be in all these fields. 2 is going to be someone that knows how to use all the tools. So this is more like software development. And 3 is going to be someone that they're an egghead, they're a mathematician. They need to understand the AI algorithms. They need to understand the protocols, all this underlying stuff that makes this happen. So for me, it's really difficult unless you're going to build a team. More likely, you might buy a company, and then you might want to run that company as a separate entity that has its own P&L, and then use them as your primary. If I was to look at the data, but I would say, and the second thing I would say is we always have to transfer the intellectual property to the portfolio company. So whenever you build a team, my approach is kind of like a movie producer. I work on the investment thesis, and then I pull from my proprietary network the right folks to do the execution, do RFPs, and then do the execution. But as part of that, you have to transfer the intellectual property to the portfolio company. You need to build the digital team within the portfolio company itself, because on exit, that's what a strategic wants. We want to take advantage of the capability or the unique circumstances that a private equity firm has versus a public or a private strategic. They have a lot of headwinds compared to private equity. So that's going to be something that's going to be right there in goodwill on the balance sheet when they make the justification for the acquisition. It's going to be, oh, we can take this team that has this knowledge and now deploy this knowledge or this intellectual property to the rest of our company. So I would, it just depends, but it just depends on the situation. But the things to really think about is it's very varied, and you want to make sure you transfer that intellectual property to the companies that you're going to be selling, because that's going to be what's going to increase the valuation multiple. It's something I call a digital re-rate.
Cool. And then for those panelists, are you able to spend a few more minutes with us? Is that cool? Okay. For the audience members that are as well, one question that I wanted to point Stone and Charlie's direction, and we'll kind of blend these together. And it is, which part of the PE value change do you think would be most affected by digitization, or what's like a big point of leverage when it comes to digital transformation in the firm? And how do you think about budgeting for these technologies or data sources? And is there ever a time when you think, let's just build this in-house? So hopefully we can connect those two.
Yeah, I think I kind of tackle the last one first. Sounds interesting, but on the building in-house, I think it's really a lot about what Bruce said, but on an internal perspective is, if you're building it in-house, is that individual going to be able to have the expertise to help across the board for all the different data sets you might need, from limited partners to portfolio companies and whatnot? So I think that could be a difficult hire, could be expensive. And so I think to mitigate that is finding a fantastic partner that can help you with this. And so it's not meant to be a shameless plug, but Altvia can play that role for firms, right? And we've worked with them on our LP CRM and management, and we customize our database constantly, and we have a point of contact there that helps us customize it. And so I think that's how we've gone around the ability to customize our data set, so it's not just a plug and play and you get what you get from a provider. And then in terms of budgeting for it, I think it's really, you kind of need to take a big step back and look at your entire tech stack across your firm, and what is the budget for that you as a group want to deploy into it internally, and having conversations with the end users internally about how much is this worth to you, and is it necessary to elevate your job function, whether it be the investment team, middle office, back office. I think that coming up with a reasonable budget it's hard to say exactly a percentage of fees or AUM, whatever it may be. I think it's very customized, but I think having conversations with the team to understand the importance of it will allow you to find an appropriate budget and compare that to what it would be like to staff in-house and the expense that would look like. And it likely would be cheaper to find high quality providers to help you with your data management in this situation. That would be my perspective.
For sure. And also internally too, like if you do it right, just quick 2 cents here, right? There's usually only 3 pillars of a technology stack in any environment. And that's how you manage your books, accounting, how you manage your employees, HR tech, however you want to think about that, and how you manage your customers. And so those are usually kind of the spinal cord from an IT perspective. And you can draw benchmarks too from portfolio companies as just another kind of way to extract value from some of the data that's happening there. But Charlie, anything you want to add there, good sir?
Yeah, the only thing I would add, I think we look at, culturally, right, we have to make a decision where we want to be in 5-10 years at Summit Park. And I think we all have to be aligned in that. And so in terms of budgeting, right, there's only so much we're going to allocate. But I think we want to prioritize. We all want to do a ton, right? We never have enough time to do everything that we want to do. But as a firm, if we can prioritize where we want to invest our money and resources and time, we can have the best outcome. And I think, to Bruce's point, we invest heavily in our network and finding operating partners. And we have, one that is great on the digital marketing side. We have 2 that build a large IT consulting firm that knows really all things digital transformation. And so we leverage their experience as much as we can. So when it's a question of budget, we really tap our network and try to find individuals that have experience that we can really learn from.
Awesome. With that, just 5 minutes after, we'll take it. I wish we could all, clap for you all, but that's not really available in the weird world we're living in. Maybe one day we'll do one of these in real life. But thank you all again. Thank you everybody for tuning in. Hopefully this was useful. In terms of follow-up, we'll send a recording out, of course. We'll probably send a survey. If you find it in your heart, 2-question survey, let us know how we're doing. We obviously want to iterate on these and get better over time. And my email is Kjael, looks like Kjael at altvia.com. Jeff is jeff@altvia.com. If we can be helpful, if you want to continue the conversation, we live for this stuff, so we're always a resource. But with that, everybody, enjoy the rest of your day and have an amazing summer. Take care.